Hi traders, welcome to this week's pre-weekly market review. Today we are going to be looking at three major reversal spikes that we saw towards the close of last week's market, and we're going to talk to you a little bit around these moves. Before we do so, guys, just a quick recap. Crazy week last week. I should warn you that October, November, December, these 3 months, historically, if you look back towards the end of the year, are absolutely volatile, which means that you need to keep risk management very, very tight. And be very cautious, obviously, when it comes to your risk reward and the trades that you're entering into. One of the reasons for this is we have a couple of things going on simultaneously. It's the end of year, final quarter, so a lot of profit taking place in the market, people closing up annual positions or banking profits and causing, very excessive swings in the market. Another is obviously we are in earnings season at the moment, so you'll see equities markets quite dramatic. And last but not least, obviously, a lot of players tend to prepare themselves already for next year's market. And so as the volume tends to move away from the final quarter, so too does the choppiness of the market become more and more volatile. So last week, guys, stocks took a huge reversal, especially the US indices. You can see the S&P, as we're going to show you soon, made some quite dramatic swings there. After a huge sell-off, we had some very sharp reversals, and the ECB and the Eurozone came out with more announcements, basically saying that they are here to further help support and commit to the European debt crisis, and their way of obviously supporting this ongoing issue is to increase their efforts and asset purchases. So this is going to be quite a game changer now as they step up the pace once again there, and possibly this could actually relieve some market tension maybe from this heavy euro sell-off we've seen in the last few weeks and months. Last but not least, guys, the US may not be ending QE as soon as we thought. Obviously there was a lot of bullish momentum in the dollar trades over the last few months. Everyone thought that QE was fizzling out slowly and interest rates were looking up towards 2016, but that's not quite as clear cut as it was initially made out to be, and so we've seen a little bit of hesitation there, especially if you look at the VIX, which is the volatility index. You can get further clarification of that risk on, risk off type appetite. Before we cut down to some of the cross pairs, let's take you through that equity market move, guys, from last week. So this is the S&P daily chart. You can see here it's the initial range we were monitoring, just above the recent highs, above the 2000 level obviously. You can see the lower resistance and the upper support line, and now I've drawn these swings here in these arrows. So that trend was broken quite heavily obviously at the end of September, and recently you can see there that we've actually made a pullback from that breakdown. So you can see there the bottom red line was broken, and then in last week's market, right towards the end of the week, the last two candles you can see have shown a very dramatic spike and a reversal. So those spikes are sharply trading through the Bollinger Band, and that can often be a very good indicator to basically signify a reversal there. You get sharp buyers coming in and forcing the trend to change quite heavily, and also you'll notice by these circles I've drawn, they're not actually lower than the previous lows, which you can see here on the left hand side of your screen. I just show you there with a circle, there you go, and this low is not quite as low, so it sort of marked a low in the market as far as wave theory goes, but not lower than the previous low, which is a positive sign. So equities may well start to enjoy some sort of resumed rally towards the end of the year and beginning of next year maybe. Moving on now, we have the USDCAD daily chart here. You can see here the range on the daily chart over the last couple of weeks has been pretty solid between the upper resistance and this lower support. I've drawn it for you there, guys. The range tends to be about 100 pips all the way up, and now we've seen at the end of this range some nice reversal spikes there. These are sort of spinning tops and a doji candle that you can see, and that can often also be a sign of a reversal there on the dollar CAD. Now interestingly, this coincides with a resistance level. You can see it on the left here. We've moved from a daily to a weekly chart, and that is signifying a potential double top. So if the double top holds up, we'll see markets selling off from here, and if it doesn't, then obviously 1.1 275 towards 1.13 will be a signal to basically go long if we see things breaking up beyond that spike. So something worth noting there, and well worth trading, obviously, because it offers a nice risk reward on the double top trade. Last but not least, we are looking at the euro yen. We saw the euro dollar creeping up a little bit as the dollar sort of had a light relief to itself over the last week. But we felt that the move wasn't strong enough, and actually a lot of this momentum has come from the yen, which has been rather strong recently. So we've seen here that when you put this cross pair together, the euro yen showed a very dramatic reversal spike at the end of last week, and this is our third spike that we mentioned that we wanted to talk to you about. This spike is pretty significant. The spike was actually, if you can see here, from 134 all the way towards like 135.50. So it's quite a big spike there. You got at least 150 pips there on the reversal, and obviously it coincides with previous support levels that you can see to the left of the chart that come in just around about 136. So as long as it doesn't break below this spiked area, then you might want to consider trades here which are looking towards retesting areas of 138 and previous resistance levels towards the center of the chart. Okay guys, we hope this has helped and that you're ready for this week's major market news. We still have this week a lot of announcements in Canada, so watch that dollar CAD trade, Monday's wholesales, and Wednesday of course the interest rates, and then there's also data coming out from the UK, specifically you can see here that we've mentioned on Friday the preliminary GDP, so keep an eye out guys. And last but not least, don't forget on Thursday there are unemployment claims in the US, and sometimes these can also have quite a nice impact on some of those dollar pairs, euro dollar, pound dollar, and dollar CAD specifically. Alright guys, have a great week and trade safe.